Hi everyone, welcome to today's video. I hope all of you are doing well. On today's video, we are going to speak about sensible speculation. Because no matter how much I talk about investing only in fundamentally good stocks and looking at and understanding decoding businesses and using technical parameters to investing, people will still end up speculating. Is speculation always bad? The answer is no, because we as humans have a tendency to gamble. That is what prompts us and prods us to speculate. So from that particular perspective, it is okay to speculate, but it is very important for us to sensibly speculate. So that is what I'm going to teach you today. It's going to be a super interesting video. Also, a very quick shout out to our sponsors for today, which is Ditto. It is okay to speculate in markets, no problem. But please don't speculate with your health. Therefore, please go and check out Ditto. They allow you to understand more about your insurance requirement. You can schedule a free phone call with an insurance expert by using the links. It will help you understand how much premium to buy, what type of insurance to buy. There are multiple nuances that you need to understand, and experts from Ditto will help you decode that. So first and foremost, let us understand what is the meaning of speculation in very easy to understand language. Now what happens is that many a times you don't understand the business fundamentals. You don't look at the technicals. You don't probably even understand what the business is about, and you end up buying that stock, or if you have it, you end up selling the stock. Now, what are some of the factors or tools that drive this speculation is? Number one thing is news. For example, a couple of months back, there was this news in IRCTC where an announcement was made during the market hours that Ministry of Railways is going to extract profits out of IRCTC. Then what happened? The stock price tanked quite a lot during the day. And towards the end of the day, a news was released again that, this decision has been rolled back. So a lot of investors lost money. Why? Because they were speculating. They did not understand why they were getting into IRCTC in the first place. What was their buy target? What was their sell target? So not having a fundamental understanding of the stock and entering into it is just a recipe for disaster. So that is what pointless speculation is. Therefore, it is very important for us to have a sense as to why we are purchasing something or why we are not purchasing something, why we are selling something, why we are not selling something. All these things should be clear in your mind. What other things drive speculation? For example, you will hear your friend or some uncle in the park that, beta, Indian government is going to sell this particular company. So go and buy it. Then you get super excited. You come back home and buy that stock and it turns out to be a disaster. So that is again speculation. You are just simply trading on news. Another key form of speculation is that big investors keep on releasing news that Rakesh Jhunjhunwala did this, or some other ace investor in India did this. Now they are doing their stuff. You need to understand why you are buying or selling some things. So this is a very important aspect around speculation, that speculation is news driven or it's just random information driven. So please don't act too much on news. This is a very important aspect because media itself is owned by a lot of corporate houses. I will not speak further on this. You guys are smart, so you will understand my point that I am trying to communicate. So from that perspective, you must understand the difference between bad speculation and good speculation. Bad speculation is what I just described, that you're just acting based on random information. Please avoid that. This will help you save a lot of money in terms of not taking an entry into bad stocks. So what is good speculation? So good speculation simply means that the entire picture of something is not clear to you, but you're still acting on partial data. For example, before taking an entry into any stock, you must understand its business prospects. You must understand what the company exactly does. The reason why I have criticized Paytm's business model is because this aspect, what it does business in, is not very clear. How it makes money is not very clear. How is it profitable is not very clear. Second key thing, the fundamentals of the business should be very clear. And also there should be some kind of technical indicators that are forming. If all three things are happening, then it's a good, sensible purchase. But what happens many a times is that the entire picture on all these three things is not clear. Let me give you an example. For example, when we go and try to buy an IPO, what are we doing? We are essentially speculating because the information about the firm is not very clean or clear. It has no technical history. The business models have not been figured out. So what are we doing by jumping into the IPO market? We are literally speculating. There is no harm in speculating, but it should be done sensibly. So now let us understand how we can speculate more sensibly. And I'll explain a simple 4-point process. Step number 1 is that you should pick the right assets to speculate. Now, right assets can be of multiple types. So let me use 2 examples to illustrate my point. So first, let me pick my favorite stock, which is HUL. And then B, let me pick an extremely volatile asset, which is Bitcoin, right? Bitcoin. Now, I would argue that both of them are really good assets to speculate. Now, why is that? You need to understand the flow. So let me show you the trading history of HUL, and what you will see is that right now, HUL is from its peak, it is below roughly 15%, right? And if you see that it is trading below its 200-day moving average line also, right? 200-day moving average line, right? So this is an information that is very clear, very easy for us to understand. Now, if you check the quarterly results for HUL, you will clearly see that the profits are also up, revenues are also up. So all good things happening in the company. There is no massive problem per se. So right now in HUL, if you just simply use your brain, you will quickly realize that if you compare the risk reward equation, the risk is low in HUL and rewards are decent. These are decent because at some stage this will go up by 15-20% and there are okay returns to be made. It's not as if that you are making mad money here, but because you are taking very less risk, the risk adjusted returns are decent enough. So that is what a sensible speculation would look like. Now let us compare the other end of the spectrum. So let us go to something like Bitcoin. So now if you do a risk reward analysis for Bitcoin, you will see that Bitcoin is down by roughly 38% from its recent peak, right? Now, Bitcoin is also a very volatile asset. It can fall quite a lot again. But the history shows us that Bitcoin comes back. It falls by roughly 80% after its every halving cycle, and then it makes a new peak. This is what data and history tells us. But it also tells us that Bitcoin is a highly volatile asset, right? It's a highly volatile asset. So what is your risk reward here? Here you should think long term. For example, if you invest 100 rupees, right, in the Bitcoin, in 10 years, if the crypto market survives, what will this become? It will at least go 100x because the regulatory clearances will be there. All good stuff, institutional money will also flow. So Bitcoin will be solid. What is the worst case scenario? That, hey, no regulatory clearances. Let's say the entire world bans crypto movement and this falls to zero. So how you should speculate on Bitcoin? It's very easy. Don't put insane amount of money. If you're looking to take a large bit of positions on speculation, then speculate with something like HUL. So this is the first key point that you must understand about speculation, that you must pick the right asset depending on its risk reward ratio. Now, the second key method of speculating is that you must get in early, especially if you are trying to catch volatile assets. What do I mean by this? Let me again give you an example. For example, people tend to bet a lot on IPOs. And usually what's the thought process of betting on IPO? That, you know what, I will bid at 100 rupees and the listing will happen at 120 rupees and I will make 20% gains in a matter of a month and I will move out. Now, please understand that here you are getting in early on a highly volatile thing like an IPO. The listing gains might or might not happen and you might end up taking a loss. So since many of you are new to the stock market, so let me just quickly explain this point of IPO as well. So what happens is you will see that Paytm shares listed at rupees 1929 against IPO issue price of 2150. So what does this mean? It simply means that you as a retail investor were issued this IPO at 2150 rupees. But the stock got listed at 1929. So instead of going up, it got listed at a lower price. And then after it started trading, and this is what the chart looks like, it kept on falling and falling and falling. And now people are sitting on a massive loss, 40-45% also. And if you go and ask someone that, hey, why did you purchase Paytm's IPO? Because that poor person wanted to make 15% listing gains on it. Now, listing gains does not happen all the time. And sometimes you get stuck with things like Paytm and you end up taking massive losses in it. Now, the point that you need to understand is that you are purchasing a highly volatile thing. So the returns or the expected returns also should be commensurate. The word of the day today is commiserate. So let me know, what does that mean? A better approach here is that if you're willing to bet on something so volatile, go to the ICO market and let me show it to you. For example, here you see that I'll pick a random coin. So I'll go to coin market cap and then I will go to a really random coin, which might have gotten listed recently. Now ICO's initial coin offering is very similar to IPOs. IPOs happen in the stock market and ICOs happen in the crypto market. So if you take a look at Mars Colony, for example, and if you check this chart, so it opened at roughly here, right, $15, $14, and it made a high of roughly $37 in a matter of how many days? In a matter of 2 months roughly, right? In 2 months, the coin price more than doubled. So it makes sense to do ICO investing compared to IPO investing. Therefore, I invest in ICOs, but I do not invest in IPOs. Now, in case you want a video on how to invest in ICOs, I'll make a separate video on that. Now, I'm not just randomly picking one coin from the coin market cap and showing you. You can go and do this exercise. And this method works 7 out of 10 times, very easily speaking. So rather than speculating in the IPO market, speculate in ICO market. That is much better. Now, the third thing that you need to keep in mind in terms of speculation is that please start with a small position. Either upward average it or downward average it. Now, what do I mean by that? So let me show you an example. Now, a few days back, I spoke about the stock called as DMart. Now, DMart is a fundamentally good stock. It's a good asset. There is nothing wrong with the stock. And I got so frustrated because I wanted to buy this stock and the stock just never fell, right? It just kept on going up and up and up, and I had been waiting for it to fall and it never fell. Finally, I lost my patience and I purchased a little bit of it. But whenever I speculate, whenever I am not fully convinced about buying something, I take a very little position in it. So I put in only 10% of my money that I had to put into DMart. For example, if I had to invest 5 lakhs on DMart, I would only take position of 50,000. Then I purchased it. I watched its performance for a couple of weeks, and today it fell by 5.5-6%. So what did I do? I purchased additional quantity of it. I increased my position by 50k. Now if it falls more, I'll purchase even more. So this is called as downward averaging. Similarly, if you have purchased a good asset, if you're not fully convinced about its price movement, whether it will go up or down, purchase little quantity, track its performance, and then upward average it or downward average it. Now, fourth and final point is that regarding your speculation, consider building a speculation portfolio. Now, I keep on saying diversification. A lot of people comment that, Akshat, you keep on harping on the same thing, diversification, because I don't want you to take a loss in the stock market. At least hedge properly, and the best way to hedge properly is diversify. I have personally read messages where people invested 50% of their entire portfolio in one single stock, and that stock completely tanked and they never came back to the stock market. So please don't do this kind of stuff. Please diversify. Please consider building a speculation portfolio. For example, if your 10 lakh rupees is the total portfolio, don't invest more than 1 lakh rupee in speculation stock. What do I mean by speculation stock? I simply mean stocks where you're not sure of. For example, it could be DMart. In my case, it was DMart. I was not sure about its price performance. The stock just did not fall for a very long period of time. I got frustrated, purchased it. It fell by 5-6% the moment I purchased it. Therefore, the final tip from my side is that please have a speculation portfolio. You don't need to go and invest all your speculation money in just one stock. So now let me take you to the final part of the video where I will show you how to build a speculation portfolio in the EV industry with 1 lakh rupees. Okay, first and foremost, why do I feel that this entire EV industry or entire EV narrative right now is a speculation oriented narrative? Because I've been tracking it for the last 1.5 years, and it's very clear right now that there is no major market leader in the EV space in India. A lot of Tata Motor holder shares will start blasting me in the comment section that, you know what, that Tata Motors is going to win the race. I don't know, and there is no evidence that it would do. Yes, it has some good things going. It has already been factored into the price, but that does not give me the confidence that, hey, you know what, Tata Motors is going to beat Tesla also. No, I don't think so. So if I have to invest, let's assume that I have a big speculation portfolio, my total portfolio size is 1 CR, then I'll keep 10 lakh rupees as speculation portfolio, and out of that I will invest 1 lakh rupees in the EV industry. So that is what my speculation portfolio for EV would be. So what type of stocks or investments will I make in the EV industry? So I'll make 3 specific types of investment with this 1 lakh rupees right now. First and foremost, I will take positions in stable companies. Now, what do I mean by stable companies? These would be companies like Maruti or Hero MotoCorp, because nothing is stopping these companies to get into the EV space. They are already experimenting with it. But these stock prices of Maruti and Hero MotoCorp has not skyrocketed like Tata Motors stock price has. So I will purchase something like Maruti Suzuki or Hero MotoCorp, whose stock prices have not skyrocketed like it has done for Tata Motors. So these are stable, sensible stocks, and these will skyrocket the moment these companies start working on EV projects and they start gaining traction. So I will invest roughly 33,000 in these type of companies. The second set of assets that I would invest in would be startups. These would be companies like Sun Mobility. So Sun Mobility is one of the leading providers of energy infrastructure and services for EV usage, right? So these are the type of companies which are unlisted, which I'll try to invest. How to invest? I will tell you in a minute. You can pick companies like Ather Energy. So Ather Energy is an Indian EV company that manufactures electric scooters. It has also established EV charging infrastructure across country called as Ather Grid. Now you will say, Akshat, these companies are not listed. How will I purchase them on the stock market? There are different options. I don't want to outline it on this particular video, but there are several companies through which you can make alternate investments. I will come out with a specific video with this topic if there is enough interest. But the bottom line is that retail investors can invest in companies like this. There are multiple platforms through which you can do it. I'm not naming the platform right now because some of you might jump, make these investments and it can backfire. So I don't want to say that as of now, but I'll definitely make a specific video on this topic. But for the purpose of our portfolio, I'll pick 5-6 such companies and invest 33,000 rupees in it. 5-6 companies, not 2-3 companies, 5-6 companies where I will invest this 33,000 rupees. Why? Because these type of companies can go from X to 100X. Companies like Maruti cannot go from X to 100X. They are stable. They will not become zero, but they will not go to 100X. On the flip side, these type of startups can go from X to 100X. They can also go to complete zero. Therefore, VC model for us. Third and finally, I will invest my remainder of the money into infrastructure, battery related suppliers or OEMs. For example, I have already purchased something like Amara Raja. It is going down. It's fine. I have invested a little bit of money only in it. Again, you could consider investing in companies like Tata Power, Exide. These are all infrastructure related plays. Just double check once if these companies are inflated or not. That's the only scenario that I'll keep in mind, because if a stock has already given a lot of run up, especially with these story stocks, they can fall a lot too. So the simple approach that I'm taking in terms of hedging my EV portfolio is that aggregate a bunch of companies together which are attacking different spectrums. For example, startups are attacking completely different game. Integrators like Tata Motors or Maruti are playing a completely different game. Then battery manufacturers like Amara Raja or Exide are playing a completely different game. So I'm hedging my bets across the entire ecosystem because I know for a fact that hey, EV ecosystem is going to get developed. That is only going to happen. Right now there is very less information on it. So we can't do much. We just have to wait for the winners to emerge. Then we will take bigger positions in it. But from a speculation, if we can't wait to get into this EV space, hedge your bets and try to invest in different range of companies. So a very quick summary of this video: speculation, no matter how much I talk about fundamental technical analysis, people are going to speculate. That is just basic human nature. Therefore, we must understand how to speculate properly, adopt the specific 4-step strategy that I spoke about. Finally, if you're taking positions in any story-based industry, like for example, EV industry, then be well diversified, then pick companies that are attacking different channels. So I hope you enjoyed the video. Give it a thumbs up and also check out Ditto, and I will see you the next time.